1. Impact of the US-China trade war. Key developments, tariffs and retaliation. Since 2018, the US imposed tariffs on Chinese goods, up to $360 billion worth, and China retaliated with its own tariffs. Supply chain disruption. Many multinational companies started relocating supply chains to Southeast Asia, Mexico, and India to reduce dependency on China. Technology decoupling. Restrictions on firms like Huawei and bans on advanced semiconductor exports have led to a growing technological bifurcation. Economic impact. Global GDP loss. The IMF estimated the trade war could shave off around 0.8% of global GDP by 2020. Rising costs for consumers and businesses. Input costs rose, hurting small businesses and increasing prices for consumers in both countries. Reshaping of trade alliances. Countries like Vietnam and Taiwan benefited from diverted trade. 2. Effects of economic sanctions. Notable cases: Russia, Western sanctions post-2014, Crimea, and post-2022, Ukraine invasion, have severely limited Russian access to global finance, tech imports, and SWIFT. Iran and Venezuela. Long-standing U.S. sanctions have crippled oil exports, leading to high inflation and economic contraction. China. Targeted sanctions on specific companies, particularly in the tech and defense sectors, aimed at curbing strategic development. Global ripple effects. Energy markets. Sanctions on Russia led to global oil and gas price volatility, especially in Europe. Financial decoupling. Countries like China and Russia are accelerating de-dollarization efforts and building alternative financial systems, e.g., CIPS, digital yuan. Humanitarian and inflationary impacts. Sanctions have complex side effects, including food insecurity and inflation in import-dependent countries. 3. Role of international trade organizations. World Trade Organization, WTO, dispute resolution decline. The U.S. has blocked appointments to the WTO's appellate body, effectively paralyzing its ability to resolve disputes. Reform challenges. Calls for WTO reform center around handling non-market economies, like China, e-commerce, and subsidies. Regional trade agreements. RCEP, the Regional Comprehensive Economic Partnership, led by China, is the world's largest trade deal and deepens Asia-Pacific integration. CPTPP, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, originally US-led, now continues without the US. EU trade deals. The EU is actively expanding deals, e.g., with Mercosur, Japan, and Canada, to bolster strategic autonomy. Global trends to watch. Deglobalization versus reglobalization. While geopolitical tensions fuel deglobalization, many nations pursue selective globalization, friends-whoring, nearshoring. Tech sovereignty. Nations are investing in semiconductor independence, digital infrastructure, and AI, quantum tech to avoid strategic dependencies. Green trade. Carbon border taxes, like the EU's CBAM, and green standards are increasingly influencing global trade norms. Bilateralism over multilateralism. Nations are increasingly bypassing multilateral bodies, opting for bilateral or multilateral trade arrangements.